Today, we're discussing the big news that sent the market buzzing, Chevron's ambitious move to acquire Hess. Stay tuned as we discuss this recent market action and provide you with the full details. Let's dive in. All right, guys, let's start with the topic that's causing a lot of chatter among investors, the Chevron-Hess acquisition. Shares of Chevron fell after they said that they would buy Hess in an all-stock deal worth $53 billion. Chris, can you break down what are the key details of this deal and maybe help our viewers understand why it's significant to both companies here?
Sure, Lacey, and thanks for having me on. So Kate Stalter wrote about this for MarketBeat, and as you said, this is an all-stock deal. So the headline numbers for investors to get their mind around are current Hess shareholders will receive 1.025 shares of Chevron stock for every share of Hess stock that they currently hold. So if you own 50 shares of Hess stock, you'll own 51.25 shares of CVX stock once the transaction goes through. Now, there's some of the normal hand-wringing that's going on because Chevron did this as an all-stock deal instead of dipping into their pile of cash to pay for it. However, if you're an investor of Chevron, you like what you're hearing from the company because they're saying that production and free cash flow growth is going to increase at a faster rate than they were already projecting. That means, drum roll please, more share buybacks, dividend increases, and that's the kind of news that shareholders love to hear.
Interesting there. Thomas, I know that you've been following these developments. So what is your take on what we're seeing and why we're seeing Chevron stock fall while Hess shares initially opened higher, but then they fell below Chevron's offer price of $171 a share? I'm also kind of curious about the contrast to this deal. I mean, it's ExxonMobil's acquisition of Pioneer Natural Resources that led to a rally in both of the stocks. So what factors might be contributing to the difference of market reaction here?
Right. So I'll start with the price action. And if you look at the price action in the energy stocks, specifically on the weekly charts, you'll see that there's really not a lot of difference. I mean, there is some name-to-name differences, but in general, energy stocks are all kind of tracking together. And that's in line with the rise of oil prices. Now, among the differences in the deal is just the nature of what the acquisition was intended to do. So CVX's deal is intended to help them boost their upstream production. And that means buying Hess. Hess is deeply invested into Guyana, which is like the world's biggest oil growth market. And in Guyana, Hess is a partner with Exxon. So ultimately, CVX's deal, Chevron's deal, is beneficial for itself and for Exxon. But on the other hand, Exxon's deal was for in the Permian Basin. They're just expanding their own footprint where they're already pretty strong. They're expanding their reach with natural gas in a region that's expected to see a very big investment in natural gas, hydrogen infrastructure. So that deal is beneficial to itself. So I think that is a real big difference in the price action. And ultimately, the price action is not really a big deal.
All right, well, let's touch on dividends quickly here. Thomas, we often hear about dividend yields in the energy sector, and Chevron boasts a dividend yield of 3.76%, and it has a history of increasing shareholder payouts. So what does this mean for income-seeking investors, and how does it compare to Hess, given its recent financial performance?
Well, I think this is good news for dividend investors. I mean, dividends in the oil sector are safe to begin with because of the increase in free cash flow we've seen over the last few years. And that's the whole point of this deal. I mean, Chevron has said the point of the deal is to improve free cash flow, and free cash flow improves the dividend outlook. So I see CVX continuing to pay its dividend. I see it continuing to increase the dividend. I see the potential for robust dividend increases and for share repurchases to continue over the next couple of years.
All right, so we know that market volatility is a recurring theme. So let's talk a little bit about the ongoing debate between fossil fuels and clean energy. Chris, what is the broader landscape for energy stocks, and how should investors be approaching this complex market? I mean, we've talked about it plenty of times before on our channel. We've seen oil prices fluctuate due to factors like increased U.S. production and geopolitical events. So how are these external elements impacting these stocks, and what do investors need to look out for in the near future?
Yeah, I mean, look, if I had a crystal ball, or it's one of those questions you wish you had a crystal ball, but
yeah.
I would answer you today the same way I would have answered you a year ago. And I think that is, if you're a long-term investor, there's room in your portfolio for both traditional oil and gas companies and for clean energy companies. Let's look at clean energy first. The Biden administration has dumped trillions of dollars into clean energy technologies. Those technologies are going to benefit from that money at some point. Those stocks almost have no choice but to go up over time. But what investors are realizing in 2023 is that transition isn't as simple as just flicking on a light switch. I mean, it's going to take years. Some of those companies, the payoff for them are years down the road. But again, I think if you're looking at it as a long-term investor, there are options for you to get in on clean energy stocks. Now, let's turn to oil. We've said on this channel just a couple of weeks ago, Thomas and I both said, $80 is the new floor for oil, and the events of this week have done nothing to change that. I mean, even though oil has been fluctuating a lot, I don't think I saw the price of crude get down under $83 or $82 a barrel, and I don't think that's going to change. And that was sort of the point of Kate's article, was that fossil fuels are going to be here not just this decade, but for the next several decades to come. We're going to need it. And so right now, it's a good idea for investors to be looking at traditional oil and gas stocks to add to their portfolio. You may like Chevron, you may not. There's others you can choose from, but certainly something like this deal, for all the reasons that I brought out and the reasons that Thomas has brought out, makes Chevron a good choice for some investors.
Thanks, Chris. Thomas, do you think that there's still room for growth and profitability in this sector?
Oh, without doubt. Without doubt. I really see this as like a near-term and a long-term opportunity. In the near term, we have OPEC plus Russia have tilted the supply-demand imbalance in favor of higher prices, and we see that in the price action. So I think in the near term, we can expect, revenue growth and robust cash flow, dividends, and repurchases from these companies. Now, over the long term, we kind of have two different scenarios that could play out. In the first scenario, we are actually able to electrify to the point of energy independence. In that scenario, we'll use less oil for fuels, but we'll still need it for lubrications and input chemicals, fertilizers. I mean, we need oil for plastics, all kinds of stuff. We cannot live without oil. In that scenario, that just extends the energy company's ability to make money from fossil fuels. Now, the other scenario, which is the really bullish case, is that we just are not able to electrify to the point of energy independence. In that scenario, we'll continue to see demand for energy, or for fossil fuels, for car fuels, for energy fuels, and that will continue to drive demand and keep the price high over time. And in both scenarios, I see the energy companies just making a lot of money.
Yeah, and don't forget, and we've brought this up on the channel before too, a lot of these oil companies like Chevron, like ExxonMobil, like BP, like Shell, they're significant players in the renewable energy markets too. They see where the train is going, and they're not going to be left behind. And they've got the cash on their balance sheets to make a significant investment in that. So investors aren't just investing in fossil fuels, they're investing in that clean energy future when you buy shares of some of these companies.
Yeah, that was one of the points I was trying to make, talking about the Exxon Pioneer deal. Exxon expanding into the Permian is giving them more exposure to natural gas, alongside where they're going to be building a hydrogen regional hub. Natural gas is important, not only for producing hydrogen, but for liquefying it and transporting it. So, I mean, that is absolutely a play on Exxon's part into the green energy future.
Yep.
All right, guys, that was definitely a wealth of information you both have shared here. So thank you so much for that. Of course, there's always more to come. So to our viewers, we're here to keep you informed. So hit that subscribe button to never miss a video. Go ahead, check out the resources I've linked for you down below, including how you can get signed up for free SMS alerts for the stocks that matter most to you. Go ahead, drop your thoughts in the comments. We'd love to hear your questions, suggestions for future topics. Thanks, guys. We'll chat in the next one.